Morning team, just going to do a quick off the cuff video. Last night's Asia session mentioned to one of the students on Discord that it was pretty textbook, um, and suggested I do a breakdown because obviously there's when you learn and you get lots of questions and stuff. So we're looking at NAS on the daily time frame here. And as you can, well, as you should be aware, if you're trading, we've had this massive blow off top, parabolic, pre-parabolic here, bit of recovery, pull back, parabolic again. And at the moment, after this big dip, which everybody was expecting to be the end of the world and crash to, new lows, we've had this pullback. Whether we'll go on to make new highs, which is my base case at the moment, or whether this is actually finished and we're going to properly roll over remains to be seen. However, looking at the daily here, and this is the first thing to note, what makes this textbook is always, as always, starts from a higher time frame analysis. So that's a green for today, but we've had 1, 2, 3, 4, 5 red candles there, and we have made a slightly lower low there. We're in this daily fair value gap at the moment. So we're not going to mess about and scale down and show you all the timings. We go straight down to 1 minute because because I should say, sorry, it's a Welshism, because last night is what we actually want to pay some attention to. So that is the bear chart. All I've done is hidden all my previous annotations. If I click that button, everything pops back up. Lo and behold, a couple of trades that we were involved with on Friday. Really good day on Friday as well. And already broken down an explanation of this. But okay, so we're in the downtrend overall. We understand that from looking at the higher time frame as a starting point. And in order to get into what's gone on today and in Asia, we always have to look left. 3 questions you should always be asking yourselves if you're trading is: where is price coming from, where's it trying to go to, and how's it going to get there? Quite simple. Once you get it ingrained in you, when you're new, obviously, you need to get the reps in until this stuff does become obvious, and it does take time. There's no getting away from it. So feel free to reach out if you've got questions. But this was the main one on Friday. We're starting from the bearish sort of overall scenario. We took a sell off the first presented fair value gap there, which worked out lovely. That was a 1 to 4. We were only targeting the stacked lows here. Asia low and the Australian low were very close together. You could argue that those are technically all part of the Asia session, but they are 2 indistinct lows. So that was, called and hit to the penny. I did think, and I'll be truthful, I thought we were going to take this as well and possibly continue down. But when we saw this, right, which is an SMT with the ES1, then we had a sort of change in the state of delivery, whatever you want to call it there. But we've taken 1 low, passed through that, 2 lows, 3 lows. That's a lot of liquidity we've taken from this side of the map over here, and we've done it very fast, right? So when I saw the depth of this SMT, I thought, you know what? I don't think I got in there. I think it was a bit higher, to be honest, right? I think it was somewhere around there. But yeah, potentially that could have been a 1 in 7. But, like I say, realistically, I was expecting this to go down and maybe pip that as well, and maybe even that one there, which are also session lows, big magnets, right? Because we've already had a heck of a drop. But once it started to turn around, it became sort of pretty obvious it was going up. This then becomes a market make and buy model almost, or we've got very little to push through there. I was in a buy up until this point here, and I thought, okay, is that as far as it's going to go? Is it going to now go down and take out this engineered sell side liquidity? But it didn't. It carried on going up, so you just wind it up and got above the first presented fair value gap, which is enough of a high to take. and look how that lines up perfectly where it dropped from. Basically, it dropped down, smashed a few lows, and recovered the whole move. That was the best of what happened on Friday. And then we had a lot of consolidation. Still some opportunities. SMT there, SMT there. We broke a downtrend there. I think I took a little buy here as well. But that was off the calls then. So that's where we're starting, right? That's all the background information that you need to know before going into the Asia Open last night. Now I didn't trade this. I was fast asleep in bed, being in the UK. But this does illustrate a couple of things. Now, the first one is the new week opening gap, which is this year. I think that might have been a new day opening gap. Oh no, that's the engineered satisfied liquidity there. But what you do get very often as well is new week opening gaps being referred back to for quite long periods of time. Even the ones back from last week and week before, they can still be important on occasion. So new week opening gaps, very strong draw liquidity. So what we've got here is a sort of inclination we might be going down, but we don't know. We could go up and grab all this buy side liquidity and session highs up here. This is a super strong draw liquidity because we've got relatively equal highs, 1 and 2, plus it's the session highs for New York AM as well. So all of this also up here is engineered buy side liquidity potentially. So when you're going into Asia, you've got no major reason to go up or down. Maybe a slight edge on the downward sort of move, but it's equally possible, as always, that we could go up here and then go down, go up here, and not even bother coming down. Everything has to be on the table all of the time, right? That's the key takeaway from that there. So we'll just move that forward a little candle there now and show you why this is as textbook as it was. So there is the opening gap, right? Now the new week opening gap, and I had this question on Discord as well, is actually from there all the way up to there, right? But because this is a minute and we're not on seconds, you've got like a split second where it's gone up there. So this is marked by an indicator, my own indicator, by the way, as well. So it'll actually pick up in the actual gap. What I used to do previously was just mark the gap that was left over afterwards, because that would often act as drawn liquidity as well. But when you've got the indicator, it will give you the full new week opening gap, second by second kind of thing, So I just want to play that forward a little bit there. Let's pause that. Let's put this back on 3, I think, and then hit play. And we got this. We're going to sweep downside, right? So that would sort of, if that was New York, that would give you some indication it might be going up here to either carry on up here or up here to come back down. But Asia is not quite the same. But we've got an indication that the selling pressure is there, right? Because we've got that little sort of background bias in our minds at the moment that, okay, we could be looking at bearish. So the first thing we do here is come back. Now we've closed the new week opening gap fully there, and we're in the new week opening gap, which is a key area, right? So you've got key area here, key area here, here, and here, right? And also here, okay? Equally, you've got buy side engineered liquidity up here as well, potentially, right? So, yeah, now at this point, an answer to the question I had on Discord is, how do you know? How do you see this as it's unfolding in real time? And this is the answer. We're going to switch on part of the answer. We're going to switch on the macro tracker there, because this happens on a macro, and this is the start of a macro as well, right? Macro is the last 10 minutes, give or take, of 1 hour, and the first 10 minutes of the next hour. So the macro there passes, doesn't really do a great deal, right? We're still stuck in the opening gap, so we're disregarding that. Slight indication there, slight downward pressure, overall buyers. Can we go up here? Yes, we can. Let's see what happens, right? On this is where things get textbook. Now what we got here, right on macro time, is a couple of things happening, right? Number one, we've just swept all this engineered buy-side liquidity. Number two, we've swept these relatively equal highs. Can we go up from here? Yeah, of course we can. But let's see what happens. Because very often after you've taken a high, right, and this is crucial. This is absolutely crucial here, right? Because once you've got a macro which has done this, and that macro could have started down here, doesn't matter. The key part is it's gone up, it's swept liquidity targets, taking engineered liquidity from here, swept the highs, and now we've got a change in the state of delivery. We've now got price showing you that it wants to head down. So once you break that point there on the 1 minute, right, you'd be very wise or very within scope, should we say, and not necessarily wise. Stop above the highs, safety first, right? You'd be very, I'd go near. Now this is equally a strong drawn liquidity, as strong, we should say, as this is here. Relatively equal highs plus session high is super strong. So we've gone, right? This is probably almost as strong, if not as strong. And what you've got here is stacked session highs, because those, if you look at it, are quite close together. We're stretching it out here so we can see. So this is where you would have potentially got in anywhere in this area here, stop around there, targeting the next liquidity. Remember now, where's price going? Where's it delivering from? Where's it going? And how is it going to get there, right? So we've gone up, we're delivering from here. So the next obvious liquidity now is a couple of places. You've got lows here, right? You've got old lows here, which are not as relevant. This is what started this move up. This is what sent this move up, right? And that came from a macro as well. So even though it's outside the macro is what instigated that move. Or you could argue it was the macro up here. You know, could argue it's that one. But either way, this is the important part and why you're so textbook. This sweep of the highs, sweep the lows, gone there, change the state of delivery, and just watch. Sorry, I have my mic off then. SMTs, right? We've broken the low there, got a bit of reaction. Broken the low there again, so you'd be very, okay to go risk off, maybe take a partial. We're still in the same trade, still working down. This is a triple draw liquidity here, engineered and session lows. So, little reaction there when we've hit that. Look, standard. Now we're coming into London now. Take the first low. And bosh, take the second low. End the sports. Easy peasy, peasy, peasy. Right. So to recap, the key to this is the macro sweeping a target, going for the opposite liquidity. Easy, simple and straightforward, right? And that's it. Have a good day. Any questions, feel free to reach out.